Well, you wanted it. You got a good fight on your hands. If you're looking for a good fight, you got one. The Bulls and the Bears are going at it. We have lost major support this morning that we were hoping to reestablish. We're dropping back down to what's been established as the new local bottom. We came back down. We're grabbing right on that and getting reaction. Hopefully, the new bottom on the S&P around 355.73. That's our current bottom, and making new lows on most 52 weeks on stocks. Some stocks back down to prices they haven't been in 4 or 5 years on some of them. It's crazy. As far as Bitcoin goes, we were really hoping to hold a level a little bit higher. Now we're coming back down, and we were going to test and see at least if the bottom it created at the opening of the month on October 3rd would hold at the 18. What was the biggest wick on this chart? We wicked down to about 18,921, and sadly enough, just a couple candles back over here a little bit ago, this morning when we had our sell off, we actually came down and wicked down to 18,859. So we made a new lower low on Bitcoin for the short-term time frames, looking at what's going on with just this month, basically. We are now, right now, on this second dip, currently holding slightly above the lowest wick on here, and basically right at what was the low on October 3rd that I just showed you a moment ago. As far as the S&P goes, we're making new lows. You go back here, and same kind of thing as Bitcoin. It's a little bit lower. So we've got very similar reactions here, but just remember the S&P 500. That's a lot of different things moving other than just Bitcoin. But you could also say Bitcoin moves the entire crypto market, so that's a lot of things moving too. So that's why I think it's good for people if they're wanting to trade or learn crypto to not just learn to follow Bitcoin, even if you have no interest in buying or trading Bitcoin, doesn't mean that you don't monitor Bitcoin and Ethereum. You will find the direction to most of your moves through monitoring Bitcoin and Ethereum. And currently, you will get most of your direction with Bitcoin and Ethereum by monitoring the overall stock market, the S&P 500, the Nasdaq, and possibly even find a closer correlation to the tech ETFs. So these are things that I think are key principles to pay attention to for people that want to trade crypto or learn crypto. Even if you're into crypto because you like all the diversity of it, you don't trust your government, you don't trust our current monetary situation, you don't trust the stock market, you think that it's all a scam, the hedge funds control everything, synthetic shares, fake stocks, dark pools. I know all about it. I've heard all about it. There's no telling which, outlook, each individual investor has, sorry. But what you need to realize is that regardless if you're a traditional person who is trading, just regular stocks, that's why you're paying attention to it, or you're someone just investing in, Bitcoin and Ethereum, and that's your outlook, these things correlate. They're heavy correlation right here. And even if you only like to trade smaller, lesser known, low cap cryptos, you need to do so paying attention to the overall flow of what's controlling that. And with your lesser cryptos, that's Ethereum. And Ethereum still moves pretty lockstep with Bitcoin. So until Ethereum decouples from Bitcoin, don't plan on having all your other lesser coins decouple from Bitcoin. You'll watch that in succession. And as of right now, we're still at a point where there's no decoupling that really matters, in any major way. Or we're watching little tiny things we sometimes point out to people to look for. But for the most part, Bitcoin moves with the S&P and the Nasdaq, and Ethereum and the rest of the cryptos follow that. So it doesn't matter if you're trading something like Alfonso coin or kitty cat collars or something no one's ever heard of. other than a pump and dump, moment going on, or some, new release that's being pumped and dumped, or some, brief influencer that can, move a crypto that small possibly. For the most part, you're going to find that your crypto market is going to follow the Nasdaq and the S&P 500. So these, I think, are important details for a lot of crypto traders, because I think a lot of people trying to trade crypto, they believe in the moment or the hype or something so much that at times they lose sight of why it's crashing or why it's going up. I mean, if Ethereum goes up 5 or 10%, a lesser coin can go up 15 to 75 plus percent. I mean, I've seen Ethereum on days that it moves 10 or 15%, take smaller scam coins, and they do 1 or 2x because of it. So, regardless if you're like, hey, my coin killed it, everybody else barely made any money, and whatever that kind of feeling is, you have to realize that that still happened in correlation, lock and step, with the Nasdaq, the S&P, the Bitcoin, the Ethereum, and it just trends down from there. So at least know the hierarchy of your positions at this point. And also, I think it's good for a lot of people to learn to pay a little bit attention to the Dixie, the dollar index. Pay attention to when the dollar is super strong. A lot of the times, you can realize when tech is having its worst days, and maybe even overall Nasdaq and S&P having its worst days, or if sometimes certain stocks are doing all right that are looked at more as safety, or institutional type stocks that don't move the same, and maybe just tech is crashing. Look and see what the VIX is doing. Look and see what the Dixie's doing, and look at these things and try to figure out where your volatility and your momentum in your volatility is coming from, to try to get an idea on having a realistic expectation, I guess, is what I'm getting at. Maybe sometimes you see a 200 or 300% gain, and then you just think, oh, I'm going to get this 3,000% gain. Well, if you jump over and look at some of these other markets, some of these other charts, and see what the correlation is, and you realize something's run up to a resistance line, is about to pop back down, or vice versa, something's all the way down on a support line and about to come back up, that might be the movement that's going to create your next move, basically. And 90+% of the time, it's not just a maybe, it is. If you got a highly speculative stock or crypto, and all of a sudden things are ripping and you have no idea why, you don't pay attention to the Nasdaq, or you don't pay attention to any of these other things, and you're to jump over and you're to look at the Dixie, and since the Dixie's been super strong and inflation is killing everything, you jump over to the DXY, ticker symbol DXY, and you pull up the DXY chart, and you see that all of a sudden that thing just came from being at a high point of killing markets with inflation to now it's pulling back, but you realize it's also about to hit a support line. You might want to pull your profits. You might even want to close your entire position that is now doing so well, because the moment the dollar stops coming down and bounces to come back up, your high flying stock is going to reverse just as fast, if not faster. So once again, I think that paying attention to other charts, learning a little bit more than just the fact that you want to trade crypto, if you are trading, these are important things to pay attention to. If you're just investing on a long-term horizon, then as I've said before, all of these prices where things are crashed are good times to start dollar cost averaging. There's a good chance we're going into a 1 to 3 year recession talk, so there's a good chance you'll continue to get better times to buy. Don't go all in at once, and really learn to, if you are going to start looking at charts, zoom out to a higher time frame, continue to look left and pay attention to history. Where are your support lines? Where are your resistance lines? And once again, just try to have realistic expectations. That'll be the biggest thing to helping you preserve your capital and stay in the game. The most important thing in a bear market is living to see the other side, being here to see the other side, lasting through this and learning to see the other side. Because if you plan on doing this in the future, this is what's going to make you stronger. This is where you get your knowledge. When everything is euphoric and up only, then you're just always looking to the stars, and that's not reality. Those are easy markets to trade. learning the most right now in a down market, building your portfolio in a down market, building your skills and continuing to add to your bag of tricks. It's no different than if a fighter says he wants to go, learn some other things, and someone says, well, you're a wrestler, why are you going to learn boxing? Or you're a boxing, why are you going to learn wrestling? Or you're a football player. Let's talk about athletes. You're a football player. Why are you going to go learn ballet? These are extra things that you put into your bag of tricks that you have a little something else when times get tough or when you're relying on just your pure skills to make a moment happen. These are the things that you pull back and you grab at, is these skills that you pick up and these extra things that you put into your bag that you have to go to. You want to have as many tools and as many tricks as possible in your bag so that it makes you as multi-dimensional as possible. As some people say, you want to be playing chess while other people are playing checkers. Well, you want to be playing 3D chess while other people are playing 1D chess, and you'd really see the board in a different way. So don't ignore the important charts, and don't ignore the other things that move your markets that can help you, because these little things will help you make big gains. All right, you guys, stay safe out there, and capital preservation is most important in a bear market, as well as lasting until the other side. Let's see how many of you actually come out on the other side, whether it's 1 year, 2 years out from now, and you've built these positions up really strong at a base, and maybe sometimes when they come up a little bit, you trim them knowing that they're going to come back down, and you keep building towards having that base bottom. So when this rip happens later, you can look back at that chart and say, I have my average, of whatever it is, DCA down to here. I'm getting the most of these profits. But you need to learn to pay attention to the level by level plays and keep realistic expectations with what it is you're trying to accomplish. And don't just look for the stars. Don't just look for the moon. You're not going to get it every time. Not that you can't get it sometimes, but if it was that easy, everybody'd be rich, and not everybody on crypto Twitter and everywhere else would be, upset and trying to show what little flex they have left. You can go back and look right now at celebrities, influencers, different people who went out and bought NFTs that were 500,000 to 1.5 million. Some of those things, without exaggeration, are barely worth $1,000 or less at this point. So if you want to know how bad or how dramatic these things get, pay attention to things like that. Things that just you could add $1 million and now it's worth $550. I mean, that's an absurd loss to take. And that's another reason why you should also pay attention to exercising your stop losses and also knowing when to cut a loss and save something. You know what I'm saying? I mean, some of those people that thought maybe their 1.5 million NFT drops down to a mil, they don't want to lose half a mil. Well, where are they at now when it's worth 500 or 1,500? So those are also things I think that people need to pay attention to, and it also goes back to that whole capital preservation thing. You gotta be able to have something left when this is over, not just be done or so beaten down that you don't even want to be here anymore. I still think that Web3 and crypto is the future. This is like stepping into you know the beginning of the technology section of the internet. And if you remember, most of the internet companies went bust. If you didn't pay attention back then, you can look it up. But just know that the companies that make it through this and the people that make it through this, they come out the other side much, much stronger and much, much wiser. I want to see you be one of them.